I know we can say we've got 100 different lenders, but how does that really play out? I'm guessing the 80-20 rule really, does come into effect here. That even though there's 100 lenders out there, I'm probably going to use maybe 5 to 10 of them. Is that
You
about
know,
true? But where
and that's
where did those other 90 come into play, and how does that really help a loan officer so they don't have to send a loan away?
Man, Eric, that's a good question. I'm going to tell you. You're completely right there with that 80-20. In fact, it's probably going to be more like 10-90 right there in that ratio. Reality with that is we wanted to bring on a huge variety of lenders with their own unique products, their own unique service, and even we'll put them at unique interest rates, unique comp plans to company. Between all of this, Eric, when a new loan officer comes into NEXA Mortgage, they're going to be able to kind of take an inventory of what their products are. The average, I guess, closed loans that loan officer is doing, they're going to be able to figure that out in LO support and really suggest which lenders are going to work out best for them. And what's going to be best for me in my market may not be the same for somebody that's over in, say, a California market.
Right.
And so, being able to understand that, you're going to find, based on your book of business and your market, which one of those lenders are going to work out best for you. And that's going to be it. You've got a variety of
You hit a
pretty much
point
everything.
there. I just talked to a gentleman the other day who lives out in Palm Desert of California, which is just a bunch of retirees from Los Angeles that went out to the Palm Desert to play golf and bingo all day long. And he is specializing in reverse mortgages. And I heard the
Boom.
guy on the Why Nexa call today ask about reverse mortgages, and boom, there was somebody on the call that was able to talk to about 5 to 10 different lenders that do those. So yeah, even though that might not be my market where I'm at, we've got those products. That's a good point.
Eric, that's a great one right there to talk about, because I'll tell you, back on the retail side, we've had lots of great training to really show us a little bit about what these different products are like, and reverse mortgages being one of them. And what I'll tell you is the difference between the retail side and the broker side. Usually, you could think there's not really any training. There's not really any support. But we've created support. We've created training. We want to not just have the best on the broker side, but the best in the country when it comes to our training and our support. So when it comes down to new products, let's just say if we hop on over here into the broker side and we're not used to any new products, well, there's a huge way for you to expand your business. A, if you know it's there, and B, you know where to find the training, and C, you just originate those deals. Reverse mortgages are one of those. So where in the beginning I thought that's not going to be my market. That's not going to be a big deal. But what I realize now is with all the training we've got, I realize the reverse mortgages are actually a very beneficial product, and it's something that I've got all the training available to be able to originate that at a very high level. We've got account executives that are ready and waiting for us to be able to do entire classes on how to originate these unique products, with reverse mortgage being a great example. But that's not limited to just, say reverse mortgage or some other things. We're talking DACA loans. If you're in certain markets that are right there, manufactured homes,
I
goodness.
got one of
If
those
you,
yesterday.
yeah.
A lead for a
And
manufactured home yesterday.
absolutely. And you know what? Let's talk about different things like HELOCs. While you're not going to make a ton of money on originating those, Eric, you're going to be able to at least keep these loans and these borrowers right there in your, pretty much in your pipeline. Nothing's worse than referring a borrower over to another company because you can't originate these products. And next thing you know, wow, this guy over here, Tom Jones, decided to do the HELOC, but now Tom Jones is asking your borrower for referrals, and they're giving them to him. They're giving them to him because you know what, Eric? You could have stopped right here and been the one-stop shop for every one of them. And now you're going to be the one-stop referral for all of those mortgage needs. And it doesn't stop at, some of those, but anything you can think of. Do you want to do construction loans? Do you want to do commercial loans? All these things are completely available for you to keep business right here in your pipeline, and for all those individuals to know that you've originated loans for, that you are the one-stop shop. You're the low-rate leader. You've got the largest portfolio of loan options available, and this is so strong for your business because you want them to know without any doubt, yes, I do those deals, and yes, I'm available for you.